Look, the rule is not new. The panic is. And to be precise, it is not even one rule. It is two rules wearing the same costume. If you ever sold a car, helped your kid, paid cash for a repair, moved savings, or walked into a bank with a stack of cash, this matters. Because the trap is not the $10,000 line. The trap is what ordinary people do when they try to dodge it. They split deposits. They use two branches. They spread it across days. They call it being smart. And that is exactly where the machine starts paying attention. My lawyer makes me say this is educational. He also says I should stop making compliance sound like a heist movie. Fine. Both can be true. Here is the thing nobody explains cleanly. If a bank handles more than $10,000 in cash in a single business day, it can trigger a currency transaction report. If a trade or business receives more than $10,000 in cash in one transaction or related transactions, that can trigger Form 8300. That is the boring part. The dangerous part is the human part. Because the system does not just look at the amount, it looks at the pattern, and that is where people get burned. A report is not an accusation. It is a record. But records are boring until they are not. The reason this gets messy is simple. Honest people hear the threshold and start improvising around it. They think the threshold is a loophole. It is not. It is a reporting line. Big difference. $9,900 is not a magic shield. Two deposits of $9,900 can look worse than one clean deposit. 3 branches do not save you. 3 days do not save you. If the pattern looks deliberate, the bank can still see it. And if the bank sees it, the story changes. Then comes the suspicious activity report. Now the bank is not just counting, it is connecting dots. And no, they do not get to casually tip you off. That is not allowed. So the teller is usually not the villain. The teller is the person pressing the button. The machine is the villain. And the machine is very good at noticing repetition. Meet Sarah. She is 47. She sells a used car for $12,000 cash. A friend tells her to be clever. Do $9,000 today, he says. Do the rest next week. Sarah thinks she is staying invisible. She is not. She is creating a pattern that looks deliberate. That is the whole problem. The money was not the crime. The camouflage was. Meet Marcus. He runs a small repair shop. A customer pays him in cash over a couple of visits. $8,000 one day, $4,000 the next. Marcus thinks only the final total matters. It does not. If the payments are connected, the total can matter very much. In a trade or business, related cash payments are not invisible just because you broke them into pieces. That is where the paperwork reality starts. And once paperwork enters the room, fantasy usually leaves. Meet Denise. Her son gives her cash from a family sale. He means well. She means well. Then somebody tells her to break it into smaller deposits, just to keep things smooth. That advice is poison. Because the moment you start staging the deposits, you stop looking like a normal family transfer. You start looking like someone managing a threshold. And that is exactly what reporting systems are built to notice. Meet Evelyn. She is older. She is careful. She keeps cash in a safe and wants to move it into the bank without hassle. So she tries to do it in tiny chunks. Different days. Different tellers. Same pile of cash. Same idea. That is structuring with a sweater on. It still counts. Actually, no. Let me rephrase that. It is structuring with better PR. The numbers do not care about the PR. And if you think turning cash into a cashier's check makes the trail disappear, slow down. That move does not make the source vanish. It just changes the shape of the trail. If the intent is obvious, the trail is still there. This is why the internet advice is so dangerous. People say things like, "Just keep it under the line." That sentence is how people talk themselves into trouble, because the line is not a loophole. It is a threshold, and thresholds are not permission slips. Now, about the rumor that anything over $600 gets taxed. No, that rumor is a mess. It gets repeated because it sounds scary and simple. It is not simple. It is mostly internet compost. It mixes up unrelated reporting rules, platform chatter, and half-remembered headlines. Your bank deposit is not some secret $600 tax event. That is not the rule. The real issue is cash, intent, and pattern. That is the whole difference. And once you understand that, the fear gets smaller. Not gone, smaller. Because the real mistake honest people make is not criminal intent. It is overreacting. They hear the rule. They panic. Then they invent cute workarounds. That is when trouble starts. Here is the clean version. If the cash is legitimate, keep the story clean. If the cash came from a car sale, say car sale. If it came from a gift, say gift. If it came from business receipts, say business receipts. Do not narrate your whole life. Do not volunteer weird side stories. Do not say, "I am trying to stay under anything." Do not joke about hiding it. And do not improvise a reason that makes a normal deposit look suspicious. The bank does not need a novel. It needs a truthful explanation. Short, consistent, documented. That is how boring people stay boring. And boring is good here. If a teller asks for documents, give documents. Bill of sale, invoice, receipt, withdrawal slip, gift note, account statement, date, amount. That paper trail is your friend. If the money has a real origin, the paperwork should match it. If the paperwork and the story do not match, that is where the headache begins. This is also why businesses need a separate level of discipline. A customer hands you cash, then hands you more cash, then a little more. Maybe it is all connected. Maybe it is not. If it is connected, the reporting clock is already running. If you run a store, a shop, a dealership, or any cash-heavy business, you need to think in patterns, not just moments. A clean moment is not enough. A clean pattern is what matters. And yes, the government can absolutely see more than most people think. That is not conspiracy. That is how large reporting systems work. They are built to pick up repeated behavior. They are built to connect dots across time. They are built to say, this is not just a random deposit. That is why one innocent mistake can become a bigger issue when it repeats. One large cash event is one thing. A repeated attempt to stay just below the line is another. The second one starts to look intentional. And intentional is the word you never want attached to the phrase evade reporting. My attorney reviewed this section. He told me to say the following sentence very clearly. Do not try to out-clever a reporting rule. He also told me to add that he charges by the hour. Both facts are stable. Now, let's separate the two systems, because this is where people get lost. A bank rule is not the same thing as a business reporting rule. When a bank handles cash, it may have to file a currency transaction report. When a business receives cash in a trade or business, it may have to file Form 8300. Different forms, same basic lesson. Cash has memory, And the system is built to notice when somebody is obviously trying to make that memory hard to read. That is why the word structuring matters so much. Structuring means breaking up transactions to evade the report. That is the whole game. Not the money itself, not the source by itself. The move, the intent, the pattern. If you walk into a bank and you are nervous, do not perform nervousness like a magician with bad timing. Be brief, be factual, be consistent. If you are asked where the cash came from, answer the question. Do not make it theatrical. Do not make it evasive. Do not make it weird. The sale of my car. The proceeds from a business transaction. A family gift. That is the lane. Not a speech, not a performance, not a riddle. And if the bank asks for more information, that does not automatically mean you are in trouble. It means they are doing their job. People confuse scrutiny with accusation. They are not the same. A bank asking for documents is not the same thing as a detective kicking in your door. It is not fun, I know. But it is not the same thing. And if the bank is filing a report, that does not mean you are guilty either. It means the paper is moving. That is all. The real risk is what people do after they get spooked. They start slicing up honest money into suspicious fragments. They start making 3 deposits instead of 1. They start moving cash around like it is radioactive. That is how an ordinary story turns ugly. So here's the practical side. If you have legitimate cash, make the trail easy to follow. 1 clean story, 1 clean folder, 1 clean set of records. Put the bill of sale in there if there was one. Put the invoice in there if there was one. Put the withdrawal receipt in there if you pulled the cash out earlier. Put any written note that explains the transfer in there. If the money came from a family sale, write down the date and the names involved. If it came from a small business, keep the receipt trail together. If it came from a gift, keep the note. If somebody ever asks later, your future self will not need to reconstruct a crime scene. He will need to open a folder. That is the whole difference. And if you are a business owner, the discipline matters even more. Because the moment cash starts moving through a business, the government assumes there is a commercial context. That means the amounts, the dates, and the related payments matter more than your gut feeling about what seems normal. Your gut is not a compliance system. Your paperwork is. So if the same customer pays you in several installments, do not assume each piece is independent just because it was split up. If the payments are related, the total can matter. If the payments are connected, the reporting obligation can appear. That is why small business owners get blindsided. Not because they are thieves, because they are busy. They are welding, fixing, selling, delivering, cleaning, invoicing, and answering phones. Then somebody hands them cash in pieces and says, "No big deal." It can be a big deal. Not because the cash is evil, because the trail is. And the trail is what the forms are built to capture. The other part nobody likes to admit is that the system is designed for patterns, not personalities. The bank does not need to believe you are a bad person to file a report. It only needs to see behavior that fits a pattern it is required to notice. That is why panic is a bad strategy. Panic creates weird behavior. Weird behavior creates questions. Questions create paper. And paper is where a lot of people start losing the plot. Now, the important part. A report is not a conviction. A report is not proof of crime. A report is a signal. Sometimes it is routine. Sometimes it is a warning. Sometimes it is just a bank doing its job. That is why the correct response is not panic. It is paper. It is honesty. It is consistency. And if the situation is genuinely messy, get a qualified professional involved before you move the money. Not after, before. Because once the pattern is built, the cleanup gets harder. Here is the exit strategy. Do not play camouflage games with cash. Do not scatter deposits because you are nervous. Do not split legitimate money into suspicious fragments. Do not convert a clean problem into an ugly one. If you have a legitimate reason for the cash, make the trail easy to follow. Use one clean story. Keep one clean folder. Keep the receipts together. Keep the dates together. Keep the amounts together. And keep the explanation the same every time. Tonight, make that folder. One folder, one place, one habit. Because the people who get burned here are usually not masterminds. They are people who thought a small shortcut was harmless. It is never just a shortcut. It is a pattern. And pattern is what the banks, FinCEN, and the IRS care about. The system is not broken. It is working exactly as designed. That is the part nobody likes to say out loud, but once you hear it, you can stop arguing with the wrong thing. The rule is not the trap. The trap is pretending the rule will go away if you get creative. It will not. So be boring. Be truthful. Keep the paper. And if someone in your family still thinks every bank rule is optional, send them this before they do something expensive. My lawyer wants the last line. Fine. This is educational content. The numbers are real. The machine is real. And if you understand the pattern, you do not have to fear the line. You just have to respect it. Tell me in the comments which money rule people around you misunderstand the most.